Hello, I'm David Mandy, President of O&M Partners in New York. I want to welcome everyone today to the Generation Mining Town Hall call. It's a pleasure to have you here. Um, Generation trades on the Toronto Exchange under the symbol GENM. For those of you who are new to the broadcast, O&M is in the business of bringing public companies and investors together in real time. The information presented is already available publicly. We're hoping that this broadcast will bring this information to your awareness, clarify context, and help you make a better informed investment decision. O&M Partners is a communications company. We're not commissioned and take no money from Wall Street. This is a communications vehicle. Yeah, please feel free to chat in your questions through the question pane of the GoToWebinar via email. We'll try to get to all your questions. If not, after the call, we'll come back to you with answers from the company. If you called in by telephone, you will not be able to hear the first 12 minutes of the call, our introduction by Gwen Preston. So please stand by or use the listen by computer option. Before we turn to our guest, our host, I should say, Kerry Knoll, the Executive Chairman and Director of Generation Mining, we're pleased to have Gwen Preston on the call with us. Start to give us kind of the overall view of the palladium market and what's exactly going on in the category. Gwen is certainly the person to do it. She's a senior writer with the Northern Miner, has spent years visiting projects, interviewing geologists, talking to analysts and management teams to understand the projects. In the midst of these 2 years, in the midst of all this, she spent 2 years with Casey Research, where she learned more about the capital markets and the newsletter business. She has a deep knowledge base. It's a real pleasure to have Gwen on the call. I'm going to turn it over to Gwen now. Thanks for joining us, Gwen.
Well, good morning, everyone, and thanks so much for joining us on the call here today. I am just going to try and give us a bit of an overview of the platinum group metals market. I'm sure if you're on the call, then you are interested in the market and probably know a reasonable amount about it. So I will keep this fairly brief, but it's a pretty interesting space. It's a pretty dynamic space right now, and it's one with some very interesting investment opportunities as we are here to learn about today. So this slide's fairly obvious. This is the starting point of this discussion. It shows the platinum and palladium price charts for the last, I think this covers 15 years each. Yes, 15 years each. And so the point, I mean, it says starting point. It is the starting point of this discussion, clearly, because these are very different price charts. Obviously, we have platinum, which went on this insane price run in the last precious metals market, gaining 450% in 7 years. And that move really mattered because when a required component in a car part quadruples in price, car makers respond. They don't want to pay that much. And so they switched from platinum to palladium. And so you can see the result of that. The platinum price has declined steadily over the last 9 years, while the palladium price has moved in the opposite direction. And of course, that price move got quite a bit more dramatic in the last year, and palladium is now worth more than gold, and a lot more than gold, and is at all-time highs. Okay, so why did that matter? Because this increase in demand from car makers, auto catalysts now represent 75% of the palladium market. So we went from very little to 75%. That's a huge increase in demand on palladium, and supply just couldn't keep up. Most palladium is produced as a byproduct from mines that are primary nickel or platinum. As a good example is the fact that Norilsk Nickel is the world's biggest palladium producer. So that in itself means The fact that the metal is produced primarily as a byproduct means that it is difficult for palladium to respond to price increases. We need the price to increase for nickel and platinum for those mines to start producing more. Then you layer in the fact that the platinum mines from which we get our palladium are largely in South Africa, which has been plagued with cost, power, and labor issues. And we have a palladium market that's been in deficit for 8 years now, and a significant deficit. This isn't just a little bit missing. We're now very short on palladium, and we have been for quite some time. And we don't have any solution in sight. I mean, the quotes that I have here and there's no solution to this problem in sight. So JT Matthews is sort of the leader in assessing the PGM market. And these two quotes, the quotes at the beginning of this slide are from them. The palladium deficit is likely to deepen in 2020 as key car manufacturers are required to comply with even more stringent environmental requirements. And so that simply means more of the precious metal in those auto catalysts. And that's going to lift world automotive demand above 10 million ounces. Look at what I have circled on this slide. That is total supply. You can see that that's 6.9 million ounces. That's a big gap, right? Just auto catalysts alone need 10 million ounces, and gross supply or total supply is only about 6.8 million ounces, 6.9 million ounces. That's the deficit that we're facing, and it's not going to change this year. Will it change in the long run? Yes. It will change for two reasons. First of all, there are new palladium projects and mines being advanced, expansions at operations, but those aren't really going to have an impact for another few years. 2023 is sort of when those mine expansions start to come online. And over that same time frame, we are all sure that car makers will start switching back again. If platinum's going to be way cheaper, let's go back to using platinum. Or probably have some sort of middle ground, right, where they use both so they stop pushing these prices in opposite directions. So that will happen, but both of those things take time. They are not going to have an impact this year. And so the palladium market is going to remain in significant deficit this year. What does that mean for palladium prices? It's pretty hard to predict that palladium prices are going to jump from here when we're looking at a price that has already moved from $1,000 to, pick your price, $2,200, $2,300 in the last little while. So I'm not going to stand here and say that palladium is going to keep running. What I am going to say is that we are in a new palladium price paradigm. And that's a pretty hefty statement. This is a long-term price, or this is not such a long-term price chart, but this looks back at where palladium has come from. Palladium was worth less than $1,000 an ounce for many, many years. Now it's worth over $2,000 an ounce. That's a new paradigm, and that matters because it puts projects in a completely different set of calculations in terms of whether they make sense. Now, when we have prices that jump, vanadium or molybdenum, those prices jump, you don't want to immediately start looking at projects and saying, oh, well, it didn't make sense at the previous price, but at this amazing new spot price, it makes sense. But when you're looking at a market that has this fundamental deficit that is going to persist for quite a few years and will only be solved by bringing new mines and new projects forward, you do need to incorporate a dramatic change in the pricing paradigm, which is what we're looking at with palladium. It's happening because we need new mines. So let's use some more aggressive pricing when we're looking at mine calculations. And so what this all comes down to for me is that the palladium fundamentals are very strong. The price has run, but we need new mines. That's the reason the price has run. And so it basically, for investors, it makes sense to have, in my estimation, project level exposure to the palladium market right now. I think the price is going to remain elevated for the foreseeable future, the next year for sure, likely considerably longer than that, because I don't see the fundamentals changing until 2022 at the earliest, 2023 perhaps. So I think we're going to have an elevated palladium market for quite a few years. In that context, it's project level exposure right now that makes sense, because palladium stocks have absolutely moved, but there just aren't that many to choose from. There just aren't that many projects that are advancing towards mines and therefore could contribute to helping to solve this problem. So I think that project level palladium exposure makes a lot of sense right now. I do want to say, what about platinum? This is, I did want to address both sides of this. Well, if you look at this chart, you can see that in the last year, the price of platinum, which had declined for many years, did start to recover this year. And the reason that it did that was investment demand. It was not from industrial demand. It was not from catalytic converters. It was from investment demand. And that was for two reasons. First of all, there was a sense that the price had come down so much, there had to be an investment upside. And it was a bit of a self-fulfilling prophecy because as investors moved in to take advantage of that potential upside, they created it by pushing the price up because they bought into platinum ETFs. Platinum ETFs then had to buy platinum. That helped the price gain. So they created a bit of their own outcome, which is great. Right now, we're in a situation where we would need that to continue for platinum to have more upside in the near term. There is not likely to be any growth in platinum. Platinum is likely to remain in surplus unless we have sustained investment demand. Is that going to happen? It's tough to say. Platinum platinum and palladium definitely track the precious metals market more broadly. And as we record this today on February 21st, we have a gold price that's almost 1650. We have a very strong gold bull market in action. So that will pull pull the platinum group metals along with it because they are another classic way of getting that safe haven investment exposure. And so there may be upside in platinum from here, from the investment side of the story, but you only play platinum specifically if you believe in the investment side of the story. And there's reason to believe in that. But I think taking a step back, the big picture answer here is palladium is where there's opportunity. The opportunity sits on the project scale, so investing in companies that are advancing projects that have the potential to fill this long-term supply gap that we have in the palladium market. The interesting thing is that most projects that have palladium, of course, also have platinum. So in a sense, you don't have to choose. If you like the palladium story and you think there may also be upside in platinum, well, buying in at the project level gives you both of those opportunities in most cases because the metals coexist. And this is all happening in the context of a rising precious metals market that I think that would be another whole presentation, but a rising precious metals market that has very strong fundamentals as well that supports the investment side of this story. So all told, I think it makes sense for investors to have PGM exposure. I think that PGM exposure should be driven by palladium, and I think palladium project level exposure is what makes sense. I think there's not a lot of, it's a difficult game to try and guess what precisely is going to happen with the palladium price from here, but there's good reason to believe that we're in a new price paradigm for palladium, where projects that perhaps haven't made sense for decades now not only make sense but are needed because of this deficit in supply that has no near-term solution. So that's my overview of the market. There's a lot of these topics that we could dive into in a lot more detail, but I think that suffices for now. So thanks very much for your time today. And if you have any questions, please always reach out to me, gwen@resourcemaven.ca, or check my website, which is resourcemaven.ca.
Thank you, Gwen. Now we're going to turn to our host today. Is Kerry Knoll. Kerry's the executive chairman and director of Generation Mining. Kerry is a visionary company builder. That's the best way I can describe Kerry. He has co-founded several successful mining companies over his 25-year career, including Wheaton River, which was bought by Goldcorp, and Thompson Creek, acquired by Centerra Gold. Kerry's track record proves that those who are successful in the mining industry, building one company, they tend to do it again and again. Although Kerry was focused on gold for the first 15 years of his career, his greatest success came when he started focusing on the less sexy, overlooked metals, such as molybdenum, lithium, and zinc. But he found the most overlooked metal in palladium. Few in the investment community seemed to notice that palladium had already soared from $800 an ounce in 2018 to $1,200 in 2019. Kerry's instincts for value led him to the Marathon project in Ontario, which is the largest undeveloped platinum project in North America. It's a pleasure to have Kerry with us, and I'm going to turn the call over to him now.
Thanks, David. And thank you all for joining the webinar presentation this afternoon. We're going to talk about the Marathon Palladium project mainly in Northern Ontario that Generation Mining acquired last July. There's a disclaimer at the start of the PowerPoint. You can read it in more detail online if you choose on our website. So, simply put, Marathon Palladium is Generation Mining's certainly flagship project. We have a number of them, but it's the one we're focusing on, the one we're working on. We acquired a 51% interest in this project, which is the largest undeveloped palladium project in North America. Last July, we purchased that from Sibanye Stillwater, a South African mining company, a South African-based mining company, which also mines in other countries as well. They're the largest platinum producer and the second largest palladium producer in the world. We have an option to increase that 51% interest to 80%, and we can do that by spending $10 million on the project over 4 years. We've already spent $4 million, and with our recent financing, we're funded to spend the other $6 million. So we actually expect either this year or early next year to have that 80% interest earned. First thing we did when we got this project in July was engage a firm to do a new resource calculation on the 3 deposits on the property, and that we went back to first principles, to the original drill core and drill hole data, rather than try to update or audit previous resource calculations. We decided to start from scratch. And in the measured and indicated category, which is the categories that you need to eventually turn into reserves when the economic calculations are done, we came up with 8.6 million ounces of palladium equivalent and an additional 915,000 ounces of inferred palladium equivalent ounces. So it's a sizable project by anyone's imagination. You don't find these very often, and in fact, there are very few of these in the world. And that's one of the issues we had when we originally started marketing this project and raising money for it, was trying to get people to understand how rare palladium was. And you know, one of the examples I saw was at last year's PDAC, the big mining conference in Toronto, of hundreds and hundreds of booths at the Investors Exchange. There was only one company that was marketing any palladium product, and that was North American Palladium, which got taken over last year for around $1 billion. One of the things that we loved about this property right from day one is the infrastructure, and that's one of the things that is high on my checklist when we get involved in a project. The project is right on the Trans-Canada Highway. It goes, the main line of the CPR rail line goes right by the property. The government is building a major power line right over our property, connecting 2 different parts of Ontario. It's a 230 kilovolt power line. And most important, we're right near the mining town of Marathon, Ontario, which supplies the big Hemlo mine just down the highway from us. So we've got the infrastructure. We don't have to build that, and that's one of the things that was holding back a lot of different mining projects around the world, is they're waiting to raise the money to build infrastructure or have a government build infrastructure, get the permits to build infrastructure. Well, we don't have that. This is already already in place. So within 6 months of getting the project, in January, we announced the results of a preliminary economic analysis. And for those of you that aren't followers of mining projects, the usual sequence is a preliminary economic analysis, which could be followed by a pre-feasibility study. And ultimately, you do what's called a definitive feasibility study, and that's where you make your production decision on. So we did step one, and we announced that on January 6th. And the numbers, which I will talk about a little further on in the presentation, were very good, and it surprised the market. And I'll also talk a little bit about what the market reaction was to that. One last point on this page is that we have currently $14 million Canadian in cash as of February 15th. We also have some warrants that from a previous financing that are well in the money and getting exercised. So we're well financed for everything we want to do. We haven't finalized our budget for 2020, but it's certainly going to be substantially less than that $14 million. So we're well funded certainly for everything we want to do this year. There's a breakdown when I talked about the 8.6 million ounces of palladium equivalent in measured and indicated. There's a breakdown of the different metals we have. And it's interesting seeing what Gwen had to say that, you know, yes, we have 3.8 million ounces of actual palladium, but we've also got a pretty good platinum credit as well. And not to mention over 1 billion pounds of copper. And these are all metals, depending on what happens to cars, whether there's some substitution for platinum, for palladium with platinum, or whether we get into more electric cars. All of these metals have a spot in one of those different outcomes. So I think we're pretty much covered whichever way the car market goes over the next several years. I was talking earlier about location. We're in a interesting spot right just off Lake Superior. We're about 10 kilometers north of the lake. And it's a lake that has had a long history of mining all around it. There's certainly the big Hemlo gold mine down the road, which has produced about 25 million ounces. There's the White Pine copper and the Lundin nickel on the south shore, and the big Keweenaw copper belt that produced 11 billion pounds of copper. There's the North American palladium mine just up to the northwest that got taken over last year. So we're in a pretty established mining area, which is important. It's important for permitting. It's important for geology, and certainly it's important for us because it's close to home. We're based in Toronto. It's not far. It's a very short flight to get there from Toronto. You can fly directly into the mine. If you go on to the next page of the PowerPoint, you can see on the bottom on the map there. The Marathon Airport is literally surrounded by our property, and you can land on at the airport and be over at the main Marathon deposit literally in minutes. So I talked earlier about the location being near the town of Marathon. One of the important things about that for us is that as the Hemlo camp is running out of ore, the gold camp, the town has shrunk in size. It was 5,000 people, now it's 3,200 and declining as Hemlo, the Hemlo workforce gets smaller and smaller. And as a result of that, the town has become somewhat depressed. And the outcome of that for us is that the town's people, the mayor, the people we've talked to in the town are 100% behind us building this mine. And you know, for some of them have even indicated to us that they can ride their bicycles to work if we build this mine. It's so close. So it's really something that we want to work with the town and work with the local native groups, and we're in discussions with them as well, and that's going well. Lastly, I mentioned the government's building this $1 billion power line, and that's going right over our property. Previous studies on the project indicated that there may or may not be enough power locally to support this mine, but with this new power line, that issue goes away. I'm going to talk a little bit about the history of the project now. It's been worked on for a long time by a lot of different people. I was actually first on this property when I was a reporter at the Northern Miner in 1985 when I was covering the Hemlo discoveries. and I was up there in looking at it, and it was very low grade then, considering palladium was only about $200 an ounce. I didn't think that it was ever going to go anywhere. And you know, shoot ahead 35 years, and we own it. It was developed up until 2010 by a company that really did a good job advancing the project, and that company was called Marathon PGM. And them and other companies drilled over 1,000 holes on the property, over 200,000 meters of drilling. Stillwater took over Marathon based on all of that work in 2010 for $118 million US. Then they turned around and sold 25% of the project to a Japanese smelter company called Mitsubishi for $81 million in 2012. In 2014, they redid the feasibility study and realized that it probably at $500 per ounce palladium, this probably was not economic, and they put it on the shelf. Those of you that follow mining would know that Stillwater put everything on the shelf in 2014. And then in 2017, they were acquired by Sibanye Gold and changed the name to Sibanye Stillwater. That's a South African company. And again, Sibanye did very little work on the project. We were able to make an offer in early 2019 to Sibanye, and the deal, we were able to conclude that deal in July. And the deal is, as I mentioned earlier, we can bring our ownership to 80% by spending $10 million over 4 years, and we've already spent 4 of that. Sibanye does have a back-in right. It's onerous, but they do have a back-in right. So they can buy back, once we earn our 80%, they can buy back 31% on a production decision by putting up the first 31% of the CapEx. So the cost of them purchasing back this 31% based on the numbers in our preliminary economic assessment are about $130+ million. So it's going to be very expensive if they want to do that. I can't speak for them whether they will or not. Our feeling is that we're fine either way, because if they do back in, we will get a 49% interest in a good sized mine for a lot less money. And if they don't back in, we're happy to push on and build the mine. One other point to make, and something that's unusual in today's environment, is that there are no royalties on the main deposit. Our preliminary economic assessment was based entirely on the Marathon deposit. It has no royalties. I'll give you an example. The North American Palladium mine to the northwest of us had a 5% net smelter return on it. 5% net smelter return can actually amount to about 25% of the profits. And therefore, us not having that gives us 2 options. One is that we can, if we raise the money, we can build the mine ourselves and make more money, be more profitable than we would if we had a royalty. Or the other option that we have is to sell a royalty or a stream, because there's been a real boom on streaming companies lately. And for example, we could sell a stream on the gold, or we could sell a stream on the platinum and keep the palladium for ourselves. And we can fund part of our production that way. That's just an option we have. We haven't really explored it. We've talked to a few of the companies that sell them, but we're not really interested in doing anything until we have a feasibility study done. So the preliminary economic assessment, that was done in, I think, record time. And the reason it was done in record time is because there was 2 feasibility studies performed on this property at much lower palladium prices. The first one was done at $321 an ounce palladium. The second one was around $500 an ounce. And so finally, when palladium got up to over $1,000 an ounce, we did our PEA, and we were able to do it fairly quickly. And we modeled it on a lot of the work, the engineering work, the design work, and the concepts that were developed by previous operators. We didn't have to reinvent the wheel here. The PEA, as we call it, came back with a 14-year mine life, producing an average of close to 200,000 palladium equivalent ounces per year. And the actual number of palladium ounces is about 105,000, and the rest is is the equivalents made up of platinum, gold, silver, and copper. Our initial capital expenditure is estimated at 431 million Canadian dollars. That's about 330 million US dollars. Our project at 2-year trailing prices. Now, 2-year trailing prices indicate a palladium price of $1,275 per ounce. As you know, palladium is nearly double that price today. But based on that much lower price, we had an internal rate of return of 30% in our PEA and a net present value of 871 million at a 5% discount. What's interesting about that is that the net present value is nearly double the capex, which you rarely see in the mining business. It does happen, but it's rare. So that's a real check mark in our favor. What's really interesting is when you get to spot metal prices, and this is spot metal prices of December 31st, 2019, and I believe that the palladium price at that point was about just over $1,900 an ounce. That provided an internal rate of return of 45%, which is just amazing use of capital, and after-tax net present value of $1.5 billion. So more, well over triple the capex cost, and that's still at $1,900 an ounce palladium. Palladium is now at $2,500 an ounce. So very, very good numbers, very compelling numbers. Immediately that sparked our decision to go ahead and take this project further. We're planning to, once we get our team together, and when I say our team, I'm talking about the engineers that are going to see us through this next phase, and we're in the process of interviewing and hiring them. We will start a feasibility study, which we expect to be done this year, and that will really tell the tale of where this project is going. And we think the numbers are going to be similar to that in the PEA. And the reason we think they're going to be similar is because of the amount of work that's been done on this project in the past. We know, for example, that where the open pit is going to go. We know where the tailings is going to go. We know where the roads are going to go. All of that was done and surveyed in and engineered by previous owners of this project. One of the most compelling things about the PEA is the cost we're going to be able to produce palladium at, net of byproducts. We're going to be able to produce palladium for just over $500 an ounce. And if you want to look at the all-in cost, which includes things like development and sustaining capital, that number is still well below $600 an ounce. I think it's around $585 an ounce. So we're going to be able to make, well, obviously at today's palladium price, we would really be able to make a lot of money. But on any foreseeable palladium market going forward, I think we're going to be able to make a really healthy profit. I mentioned earlier that when we put out the PEA, we got some really nice a reaction from the market. And what did happen in January is our share price tripled in a matter of weeks. We had multiples of offers of financing. The trading volume in the shares increased by 500% from January over the trading in December. Obviously, the news was really well accepted by the market. Of course, we've had a few things happen. The prices come down a little bit since, and one of the reasons for that, I think, has to be pointed to what's happening with this Chinese virus that's plaguing the world. The ground zero of that virus was a city in China where a lot of the cars are made, and those factories are not operating right now. So you have palladium starting to come down in price, and the palladium trading companies like Norilska, they're coming down in price, and we've come down with them. But the longer term, that's all going to get cleaned up at some point, and people are going to go back to buying cars, and they're going to go back to manufacturing cars in China. So this is what's called a cross section. It's a cutaway of the earth for those of you that aren't in the mining business. And the reddish area, brownish reddish area there is the ore body. It's thick. It averages about 35 meters thick. That's well over 100 feet. It's And as you can see, that jagged line that goes down from the what's called the pit outline there is a real indication of why the mine is going to be fairly low cost. And that's because you're only going to have to take about 3 tons of waste rock for every ton of ore when you mine this. And that's a good number. It's called a 3-to-1 strip ratio. And it's better than most, let me put it that way. This is what's called a plan view, a site plan, and this is what it's going to look like when it's in production, actually towards the end of the mine life. There's going to be 3 pits, a small one in the middle and a much bigger one to the north and a medium one to the south. We're going to be able to, we've got a spot to put the waste rock right next to the pit, which is great because there's going to be about several 100 million tons of that, and we don't have to haul it that far away. And then the tailings are also not that far away, a couple of kilometers, and they'll be run by conveyor belt, and they'll just be stacked in that one valley. So it's all a very tight little project in terms of where everything is. It's not spread out all over the place like some of them. The mine office and the shop and the plant are all going to be right side by each, right on the property, and the access road to the south there goes right into the town of Marathon, a few kilometers off of this map. When we did the preliminary economic assessment, we left some things out, and we left them out for a variety of reasons. One was because we were looking to keep our capital expenditure low, and also we hadn't done the permitting background work on 2 of the deposits and didn't want to trigger any requirements to do that work right away. So we only focused on the Marathon property. We only focused on measured and indicated resources, which is, again, unusual for a PEA. We don't have to go and do a pile of drilling to bring this into the measured and indicated category in order to do a feasibility study. We will do some drilling, but most of that has already been done. But we only use 37% of the total resources on the property. We did not use the Geordie deposit or the Sally deposit. Those will probably be mined later on in the mine life, but they'll have to get obviously permitted separately. But so when we say it's got a 14-year mine life, we've actually got a lot more material to mine for a lot longer. One of the things that we're talking about doing, and we're talking with some of the trading companies about this, is locking in some of these high palladium prices early, before we go into production, so that we can take advantage of them. Right now, our payback period in our estimated in our financial projections is 2.5 years. Well, if we could lock in today's palladium price, it would be between a year and a year and a half, we would pay back that entire $430 million. So we're looking into that. We're talking to them, the upcoming PDAC convention. We're having some meetings with people to discuss just that. Another initiative we're taking is to do some metallurgical test work. There's been a lot of developments in the metallurgical areas since it was last done 8 years ago on this property, and we're going to see if any of those work on our rock. And metallurgical test work can improve the recovery. Right now, our recovery is about 82% of the palladium and about 89% of the copper. We'd like to get those numbers a little bit higher. Our numbers are not unusual for the business, but there are some companies that are recovering higher amounts, and we want to see if we can do that, because that's really just extra gravy on the economics. It doesn't cost you usually a lot more to get higher recoveries. It's just the method that you use. I mentioned earlier that we have an option to sell a royalty or a stream because there's no existing royalties. And one of the other things is that there is a possibility that some of these 15 to 24 million tons of waste rock we produce a year could be sold as gravel. There was a Vancouver Island had a quarry that they were shipping gravel directly to San Francisco. So there is precedent for this. We're a lot closer to Chicago or Detroit or even Toronto than that shipping was. And shipping is cheap. You can do it on barges. And cities like Chicago and Detroit, it is virtually impossible to get a permit for a new quarry in those urban areas. So the waste rock, the gravel for those places has to come from somewhere far away as it is. We're on water. The cheapest way to transport anything is on water. There are dock facilities in and around the Marathon project. So we will be looking at doing a study on that as well. And that could be, again, additional dollars that could go into the bottom line of this project. And we've got some exploration, which I'm going to talk about a little bit later on this afternoon. One of the things that has not come up in this conversation yet is rhodium. And we don't know whether we will see any benefit from rhodium or not. One of the things is when we start mining here and milling our ore, we're going to produce something called a concentrate, which we will sell to one of the smelters somewhere in the world. And the concentrate's going to have platinum, palladium, copper, gold, silver, but it's also going to have about a gram of rhodium. And the gram per ton of rock doesn't sound like very much. But rhodium is trading at over $11,000 an ounce, which is about $350 a gram. And we're going to be producing 70,000 tons of concentrate a year. The current financial models do not even contemplate us getting even 10 cents for rhodium. But we think that we know that some of the smelters do recover the rhodium, and we are in a position, rhodium's at an all-time high. Today it's at the highest price it's ever been in history. So we definitely want to try to negotiate that. And that's, again, yet another thing that could add to the bottom line. And if we even got paid for 50% of the rhodium, which I can't even speculate whether that's going to happen or not, but that would add $170 million to the bottom line over the life of the mine. That's over 10 million US dollars per year. When we look at trying to compare ourselves with other companies of our size, we kind of hit a brick wall because there just aren't very many other palladium companies. So one of our companies that financial companies that we work with, developed this slide, and they compared us to the developing gold companies which are in areas with access to infrastructure, because that's a really important aspect. And they average about $72 per enterprise value per ounce that they have in the ground. Well, we trade at $7. So we're trading at in palladium and platinum and our precious metals like gold, and we're trading at about 10% of the average of the peers that we have in this slide. So we do have a lot of room to move, even for us just to get up to the ones on the right hand side, the TML and the MAX and the MOZ. We would have to get upwards of $20. So that would be a triple in our share price just to get up to that level. We also asked one of the financial advisors to prepare one of the existing Canadian-based palladium companies. And as I said, there aren't very many. This is them. The gray areas show the inferred, which means they have a much lower, what's the word I'm looking for? Much lower possibility that the ore is actually there, put it that way. And the blue is a measured and indicated, and of course we're much bigger than anybody else, and we still trade at less than the average of our peers. We would have to almost double in price just to get to the average of the rest of the palladium companies, yet we're the most advanced. And the way for us to get there is to get out, we believe, and tell our story. And that's what we're doing. We have a major marketing push going on for the next 4 months. And that'll include through the United States, through Europe, through Canada, presentation after presentation, because we think when people hear our story and see what we're doing, we think our share price will at least get up to the average of our peers. And here's a third table showing, again, similar things in a different way. This includes some of the much bigger projects, including the North American Palladium, which is no longer around. It was acquired for $1 billion. But it includes, for instance, Platinum Group Metals Waterberg project and the Platte Reef by Ivanhoe. These are some of the big palladium mines that are going into production. And as you can see, we're still trading compared to our peers at a discount. And this is going on, the last slides were in US dollars, this is in Canadian, but we're trading at $9.50 an ounce, which is at the lower end of most of our peers. So again, we have some room to appreciate. So what's the plan going forward? Well, one thing I'm proud of is that in the first 6 months since we had this project, we did what we said we were going to do. We said we were going to raise the money to buy it. We were going to raise the money to explore. We were going to update the historic resource. We were going to do the PEA. We were going to apply for a new listing, which we have are in the process of doing. We're going through the process. I can't talk too much more about it, but we hope to have a much bigger listing in the next several months. And then 2020, this year, two things that we're going to really focus on. We are going to continue our exploration, but we haven't decided at what level. But the two main things we're going to do this year are a definitive feasibility study, which will allow us to make a production decision. And we're going to restart at some point, we're going to restart the permitting process. And we're just figuring that out right now. Previous operator spent 2 years and tens of millions of dollars on studies for permitting. And the fortunate thing is that permitting application has never been stopped. It's only been postponed. And we don't have to start from scratch. We can use the old reports that have been, whether it's water, groundwater, or whether it's wildlife studies or whatever it is, those reports have all been kept up to date. And we can just restart the process at any given time and therefore get permitted faster than just about anyone else. And the new Ontario government that got voted in, I think about 18 months ago, but by the new Premier Doug Ford and the new minister responsible for mining has said that one of his main goals is to improve the amount of time it takes to get a mine permitted in Ontario. So we've got a government that's pro-mining. We've got a palladium price that's up. I mean, the timing for this project is really, really, really good. So this outlines our capital structure. Currently, we've got 123 million shares outstanding with a market cap of about 74 million Canadian dollars. It's still very low on a per ounce basis. We've also got some pretty smart people as our shareholders. When we bought this project off Sibanye, they did ask us if we could pay a good chunk of the purchase price in shares because they wanted to be a shareholder of us. And they've kept those shares and they own about 8.8% of the company. Lucas Lundin, a mining legend, I believe he's been on one of your broadcasts, or Lucas Lundin Gold, a week or two ago, has been participating in most of our financings and continues to own 8% of the stock. A very successful company, Osisko Mining, also owns 8% of the stock, and they have participated in two of our most recent three most recent financings. And of course, Eric Sprott, who's one of the legends of investing in mining around the world. He put in $5 million into our last financing for 7.7% of the company. And the management and directors, also, we own 6% of the company, and I'll say that there was no founder stock in this company. The people, the management and directors that own shares in this company all paid the same amount as investors paid. We participated in each of the financings as time went along, and so that 6% that we own of the company is all bought and paid for. It's a very common thing in Canada for new companies to hand out a lot of cheap founder stock or free founder stock. We didn't do that. We think that we should be paying the same as everyone else, and that's what we've done. And who are we? Well, Jamie Levy, who's in on this call, Jamie is president and CEO, and I've been working with Jamie for 7 or 8 years now. We founded a company together called Pine Point Mining, and got into the zinc business in 2016, or I think it was 2016, and got taken over by Osisko Mining in early 2018. And in fact, Generation Mining was the spin out of that company. Myself, my own background, if I want to toot my own horn for a minute, I founded in 1987, I founded a company called Glencairn Gold. In 1991, Wheaton River, and I had business partners. I wasn't alone in this, but and those two companies went on to both be very successful gold mining companies. We founded a company called Thompson Creek in 2004. Got into the molybdenum business. Famously went from 10 cents to $24 a share. got listed on the New York Stock Exchange. So we've had lots of different success stories in the mining career. Not every deal has worked out, and nobody in the mining business has had every deal work out. That's the nature of mining. But one thing I will say, of the 6 companies I've founded, all 6 have been taken over at one point, and 4 of those 6 got into production, and that was from a junior mining startup. That's a really unusual statistic. Just adding to our team, Rod Thomas is our VP Exploration. Rod used to be president of the PDAC. Brian Jennings just joined us. He's a CPA. He's run several junior mining companies himself and was a former vice president of Ernst & Young. I'm not going to get into detail on our entire team, but we do have a really good team of people. And of course, governance is hugely important in the mining business, and I think we've got a very strong board of directors. I mentioned Rod and Jamie and myself, but there's 4 independent directors. Cashel Meager just joined us. Cashel is Senior Vice President and Chief Operating Officer of Hudbay, a multi-billion-dollar company, and a company that has built mines recently. So he's got that experience. In fact, he built one of their big mines for them. Stephen Reeford, who's a geophysicist and president of one of the most well-known geophysical companies in the world. Paul Murphy, who's chairman of Alamos Gold, $1 billion plus gold mining company. He was also chief financial officer of Guyana Goldfields, and he was head of the mining group in the entire Western Hemisphere for PricewaterhouseCoopers. And last but not least, Phil Walford. He is a geologist, was CEO of Marathon Gold, which is developing a very promising gold deposit in Newfoundland, Canada. But he was also president and CEO of Marathon PGM when this company was sold to Stillwater back in 2010. So Phil has actually about a 27-year worth of experience with this project. He's seen it from when it was a lot smaller and a lot more difficult to develop when prices were a lot lower. So he was very happy to be invited on to our board. This is a rock, and this rock is something that we found on the property, or we didn't find it. It was actually found by Sabani a year or 2 before we got involved. But what's interesting about this rock is, first of all, the grade: 188 grams of PGMs, platinum group metals. So that's platinum, palladium, rhodium per ton. 9% copper. I mean, this is a super rich piece of rock. What's really interesting for us is that this rock, we don't think, came from one of the deposits on the property. It's massive sulfide, which is different than the kind of rock that we're mining. And a lot of very smart people who've looked at it and looked at this property think that there's a pretty good possibility that it was transported from somewhere down in the earth during one of the volcanic eruptions that took place that formed our deposits in the first place. And they were formed a little over 1 billion years ago. And so as a result of that, we're looking for the origin of this rock, because it's very possible that there's a very, very high grade deposit somewhere down below. And we're doing geophysics. We did some last year. We've did some the year before. Sabani did some before we got involved, and we've generated some drill targets, and we hope to be drilling those this summer and looking for the origin of this rock. So again, we don't need any additional ore bodies. As you saw, we were only using 37% of what we have for our economic analysis. But if we can find something that's a really high grade deposit, that would be, again, yet another game changer for this project. So that concludes the main part of the presentation. I think at this point we can start talking about the question and answer period. And I'm here.
Thank you, Kerry. Thank you, Kerry. Great presentation. We'll go to asking questions now. We're going to start with Doug Loud. Doug, questions today for Kerry?
Since one of my favorite questions is what is the status of the permits, I'm glad to hear that you're well along in the wonderful world of permitting. how long do you think it is before your permits would come alive?
Well, as I'm sure you know, a mine requires about 100 permits. You
Yeah,
need permits for everything from sewage to road building to putting in culverts to environmental to tailings disposal, waste rock, etc. You need a lot of permits. But there's two main permits you need, and there's an operating permit and there's an environmental impact study that you need approved by the government. And those are the ones we're going to be focusing on. And I can't give you, and I will never give somebody an absolute timeline on permitting because permitting is something that is just, as you know, takes on a life of its own. What I can say is that where we are in Northern Ontario, in the western part of Northern Ontario, a number of mines have been permitted recently. A mine started up not far from us, Heart Gold. There's mines in Red Lake that have been permitted. So we're in a position where the government and the people we're dealing with have permitted a number of mines recently, number one. Number two, this mine does not produce much in the way of acid rock drainage or of any other things, sulfides that go into the water, into the rivers that cause long-term problems, and they're the real stain that mining has had over the years on the environment. We don't have those issues. So again, I think for those reasons, our permitting time will be relatively short. Our goal is to get it done within a couple of years and be building the mine within a couple of years. And I think it's achievable given that Stillwater has in the past already spent 2 years on it. I think we're going to be able to do that, but don't hold me to it because governments come and go and bureaucrats come and go and
no, I understand. Is Mitsubishi still have that interest?
No, they got they sold that out when it was apparent that the mine wasn't economic in 2014. And that was just around the time that palladium went from a surplus into deficit. It didn't look that promising because it was in a surplus for so many years because it was getting produced as byproducts of other mines that it was getting produced anyways. So there were all these stockpiles. The Russian government had a big stockpile. A lot of the South African mining companies had stockpiles. So Mitsubishi just sold out, so they're gone.
Okay, thank you very much. And thank you for the honesty about the permitting.
Thanks, Doug. We're going to turn to Glenn Galata. Glenn, do you have a question today for Carrie? Okay, we'll pass. We'll go to Heinz Thoma. Heinz, do you have a question today? I saw you on the call.
Interesting project, Carrie. Just a quick question. This would be an underground mine, I would imagine.
No, this is open pit.
Open pit?
Yeah. And in fact, it's got a very low strip ratio, so it's definitely open pit. Our grades probably wouldn't be economic underground, but they're definitely economic open pit. So yes.
Okay, thank you.
Thanks, Heinz. We'll turn to Henry Eversole. Henry, do you have any questions today? No, you're on the call. Henry? Okay. We'll turn next to Victor Zhao. Victor, do you have a question today?
No question. Thank you.
Okay, thanks for being on the call. We'll turn to Rolf Wagner. Rolf, do you have a question? Anything come up for you, Rolf? Low on questions today. Jonathan Tierman. Jonathan, do you have any questions?
Please.
Okay. Scott, any call questions come up that we have that come into the call?
Yeah, we have a few. Let me pull them up real quick. First one is, when could we anticipate a transfer of the listing to the TSXV?
We're looking at different options for our listing, and we've applied for them, and we're deciding which one we're going to wind up going to. We're hoping that takes place in less than 8 weeks.
Oh, wow. Okay, great. Another question's a short one. It says concentrate to Norilsk, question mark, palladium, platinum, gold, silver, copper. So I think it's about, is that where you're taking the concentrate?
So we haven't decided where the concentrate is going to. There are more than 100 copper smelters in the world. I'm pretty much doubt it's going to Norilsk, because Norilsk is going through an expansion right now, and I think they're going to need all of their capacity. There's 20 copper smelters in China, and of course China doesn't produce any of its own palladium, so I think there will be a lot of interest there. The closest smelter to us is the Horn smelter, which is owned by Glencore in Quebec, so that's a possibility, and they do process platinum group metals, importantly. So it has to be one of the copper smelters that actually recovers platinum group metals, and that one does. So that would be our, as far as transportation goes, our best option. But again, we're going to go wherever we can get the best price. North American Palladium was selling theirs, and I don't know if they still are, but they were, when they were a public company, was selling theirs to both, their nickel concentrate was going to Sudbury. We don't produce a nickel concentrate, and their copper was going to the Glencore facility in Quebec. So we will be talking to them. In fact, we're meeting with some of the smelting companies during the upcoming PDAC convention in early March, and so we're already talking to them, even though we're a little ways off from production.
Great, thank you. Here's another one. What is the political support in the area because of the potential for job creation? Can you talk about the support that you might have?
So there's, I guess there's three sides to that, three answers to that. But first of all, there's the town itself, and we met with the mayor, we met with the council, we met with a lot of the people in town. We've had open town hall meetings, literal town hall meetings, and very, very supportive. Just, in fact, no opposition that we have heard from. It's a mining town, and it's a dying mining town, because the one mine that supports it is starting to run out of gold, and so they've been laying people off. So the people want to stay, they want their kids to stay, and so they support it. Second group that we need to work with is the First Nations, the natives, and they that was our first meetings when we first got the project, and we went up there and we sat down with the 6 different groups, one main group which is nearby, and there's 6 in the region, and we met with them. They are very supportive. They want to know exactly what we're doing. They want to make sure we're not going to provide any or do any long-term damage to the environment, and all good things and all fair things. But they're not opposed to mining as long as they're part of the conversation. And we made them part of the conversation from day one, and want to continue those negotiations. And we want to have an actual operating agreement in place sometime this year with the native groups. The third one, of course, is the province and ultimately also the federal government. And like I say, this went quite a long ways through that process with them. There was initially there were some issues. When they first went to try to permit this, they were planning on putting all the tailings, which is the waste rock, they're planning on putting it in a lake. And that kind of has gone by the wayside in Canada today, even though some people would argue that it's the best thing to do. As a result, that was changed, and a more traditional tailings facility was designed. But other than that, we think that we're going to have the support of the government of Ontario, the people of Ontario, certainly in the north. The main economy in Northern Ontario is still mining, so we're going to be part of that.
Great, thank you. Here's another one. How were you guys able to acquire such a valuable project so cheaply?
Well, we get asked that quite a lot, actually. I think that this was a project that was forgotten, and it was in a lot of people. People weren't paying attention to it. People hadn't triggered that the palladium price was going into what Gwen called a new phase. People just didn't realize it. And I think Sabani, who was selling it, had made a decision, unbeknownst to us when we approached them, but they had made a decision to sell a lot of their exploration projects. And at the time, they weren't really advertising it. I think they told us they went to one of the big world financial firms' office in South Africa, and they said they didn't know of any buyers for a project like this because in South Africa they mine much higher grades, but very deep underground. And the open pit side of this hadn't really. There are no, to my knowledge, there are no open pit palladium mines anywhere in the world. So this was just kind of unusual. So they entertained offers, and this was last. I guess this was in March last year, and we were the highest offer, and that was that.
Great. Great. I have another one here. Given everything that you've told us that's so wonderful today, can you explain why you think the share price hasn't jumped even more? You kind of answered this one, but I don't know if you have another comment.
Well, I think it's a lot of things. When we go out marketing, and I don't know how many people on this call have heard of us before they got the email to be invited onto this call, but as we go around into the United States and into Europe and across Canada, and we just, you know, it's a lot of time and to do that. And as we go around doing that, we find that almost everyone we meet has never heard of us before. So it's our job, I think, to get out and tell the story better than we have been, and to continue doing that. And that costs money and it costs a lot of management time, but we are going to continue to focus on it. We've obviously had a very, very busy 6 months, you know, accomplishing what we've done in 7 months now since we got this project. But yes, we have to just get out more and tell the story more, and I think that the market will appreciate it. And I think also, part of it is that people have seen palladium jump so fast that they're probably concerned that it hasn't, you know, that it might come back down. So we think that yes, of course it could come down, but we think that the fundamentals for a palladium price north of $1,500 an ounce are in place for a very, very long time.
Well, you're doing a good job of getting out there today, Kerry. Got a good group here. I'm going to turn back to Doug Loud. Doug, anything we missed today before we proceed to close? Doug has anything? We got to unmute Doug, please. Hey, Doug.
It's some really good stuff, and it's very interesting. And I shall pay a lot of attention. Thank you.
Thank you, Doug. Thanks, Doug. Kerry, I'll turn back to you for closing remarks.
Well, I just want to thank everyone for taking the time to hear the story. Please contact us if you have questions. If you're at the PDAC conference, come by our booth. And if we come to your city in our rounds, you know, watch. We're going to be posting our different presentations on our website, and just watch for it. And you know, you're welcome to come and hear the presentation, meet us in person.
Thank you, Kerry. Thank you for presenting today. And I want to thank everyone for your presence on the call and wish you a pleasant evening. Take care.
Thanks.